Good after evening. It'll be evening when you guys get this. Good evening. It is Wednesday, February 8th, 2023, and now it's time for this installment of 2 Minutes with Jeff. So I want to talk about everything what's going on in the housing market, specifically mortgages, mortgage rates, inventory, stuff like that. So let's just dive right into it and try not to make this long. So what's really going on right now? We are seeing mortgage rates come down. They're right around, the last time I checked, 6.18, 6.2, somewhere around there. The mortgage rates have been steadily declining since September, which is good news. This is definitely going to get more people, more buyers back in the market, and they're already seeing that. Mortgage rate applications were up 8.7% this week from last week. So we had 8.7% increase of people making new mortgage applications. That's not refinances, it's just new applications. So that's very good news. When we talk about more interest rates, we have to take into consideration what the Fed's doing, but we need to keep an eye on the 10-year Treasury bond yields. That's really what the mortgage rates are directly correlated with. That's good news. That's good news that the rates are starting to come down. Jerome Powell came out and they announced last week that there would only be a 0.25 basis point or 25 point basis point increase, which is good because the previous increases, I think basically since August, September, have been either 50 or 75 basis points. So they're starting to slow the rate of increasing down, which is good. Next, let's talk about inventory. So we can talk about mortgage rates, we can talk about everything else, home prices. We cannot forget that housing market is driven by supply and demand. It's the basic economic principle: supply and demand. Supply is low, demand is high, prices are higher. Demand is low, supply is high, prices are lower. That is the tried and true principle, the easiest economical principle to understand. So we are still at all-time low inventory wise. Well, I guess maybe last year we were at all-time lows, but inventory is going up, but it's not at a sustainable level of where we need to be. It's basically almost doubled since the lows of 2022, and that's still very, very low where we're at. So in some places we're seeing like 1.5 months of inventory. Some places we're only seeing 1 month of inventory. So depending where you're at locally, Metro Detroit, this is not nationally, this is just Metro Detroit area, what I'm seeing inventory 1.5 or less. It could be higher in some rates or in some areas. So it's still low. So keep that in mind, because we kind of have this coming up for the spring buying season. We're going to all kind of piece this together, all these details, piece it together. Housing prices are continuing to slow, and they may go negative as far as a year-over-year change from last year to this year. So let's talk about that a little bit. So one of the metrics that people like to look at is a year-over-year change. So right now it's February 8th, 2023. If we were to go back and look at the median home sale price of February 8th, 2022, we can calculate the difference, and that's going to be a percentage, and we're going to say, okay, from last year to this year, we saw an increase of 2% or whatever it is. So let's talk about what happened in 2022, because that's going to tell us it's not going to tell us, but it can give some indications of what may happen in 2023. 2022 was absolutely nuts. It started out increasing, but ended up like a literal pyramid. It ended up literally like this. And I hope this isn't backwards with the video, because I don't know how it's going to turn out. So anyways, we started January and it started to go up. And by May of 2022, we got to the top of the pyramid, and it was almost 24% year over year change. So in May 2022, the housing prices were 24% higher than they were in May 2021. That was the peak. And then what happened after the peak? Remember a pyramid? It started dropping. I mean, it started dropping and dropping fast. So in May 2022, we were at the top at 24%. December of 2022, the end of the year, we're already down to 2.5% increase from year over year. So December 2022 to December 2021, only a 2.5% decrease. Now, if this trend continues, we are on this downward path. Remember the pyramid, May 2022. Now we're on the down path. It's going to continue to drop. And because prices were so inflated in 2022, this number will go negative. I'm not certain, but I believe it will, because prices increased at such a fast, unsustainable, insane, crazy rate. The numbers are going to be negative. So we're going to see housing prices decrease from where they were 2022. It just can't stay positive. So keep that in mind as prices start to come down. This doesn't mean there's going to be a crash. It doesn't mean that we're going to, go back to what happened in 2008, 9, 10. It's not, that doesn't mean that. It just means that housing prices are going to go down. But keep in mind that this is because they increased at such a rapid rate in 2022. So I don't want people to freak out and panic, oh, my house is losing value, oh, my house is going down. It's just the year over year change is going to be negative because the values went up at such a high rate last year. So no need to panic. They need to come down to more normalized. We don't want the pyramid. We don't want this all the time in a market cycle. We want something that's more like this, a little, maybe a steady increase, maybe a little, peaks and troughs. I mean, we don't want it a pyramid. That's just not healthy. It's not normal. It's not good for the economy or the housing market. Median home sales price a couple months ago was at $410,000. It's another metric in the United States that people like to look at. Median housing price, $410,000. We've gone down. I think the last number I looked at, $405,000. So it is starting to go down. So we can predict that housing is going to start to decrease from the numbers where they were last year. So if you saw a house last year that when times were crazy, 25 offers, people selling their kids to buy a house, all that stuff, those numbers are not going to be where we're going to be this year. Okay, so let's tie it all together. We have, let's just go quick recap. Mortgage rates coming down. Mortgage rates are coming down. The peak was September, October 2022 when they hit 7.37, 7.3. It was high 7.3 is what the peak was, depending on where you're getting your data from. Now we're down to about 6.18. That's good news. That's good news that the rate is starting to go down. That's going to get buyers more back into the market. Good news. Supply and demand. Remember, real estate market is driven by supply, demand. As more buyers come back into the market, especially in this season, we live in Michigan. The market is very seasonal market. Springtime, once the snow's done, kids are getting ready to get out of school. That's when people start to buy houses. That's when the market is the most active, the hottest market. Buyers are getting back into the market right now. We know that from mortgage applications. We can track how many new applications are made week over week. So we are seeing more buyers coming back into the market. Rates are coming down. That means more buyers are going to come back into the market. What does that mean? Demand. Demand is going to go up. More buyers, demand is up. Inventory, still low. Still way too low for sustainable levels where we need to be. That's going to start to create an issue for buyers come the spring market. Guess what? Bidding wars may be back. That's just how it may be if we don't get enough inventory on the market. I don't think we will. Because you have people who are in a house with their 3.5% mortgage interest rate. They're not going anywhere. They're not going to sell their house right now at a 3.5% interest rate only to buy a new house at 6.25%. This is just not going to happen unless they need to. Unless there's an absolute reason they move, they got a job location, they got laid out. Unless there's some sort of external factor that makes them need to move, they're not moving. We're not going to get an inventory. It's still going to be low inventory. Is it going to be 2022 low? Maybe not, because the numbers have already doubled from where we were at last year. Is it still going to be low? Yes. So buyers, could be another tough year. Could be another tough year. You're going to see multiple offer situations on nice houses that are priced right, have nice updates, stuff that buyers want. Okay, buyers want the move-in ready. They want the HGTV kind of style house. Those houses they're gonna have multiple offers, and I'm already seeing it. I had somebody reach out to me the other day, want to go see a house. I looked at it, multiple offers, due on Monday, the day that they contacted me. So it's probably gonna be a no-go. So mortgage rates, supply and demand, year-over-year change. We're gonna have prices kind of taper off and decrease this year. So spring market looks good. There's going to be buyers out there. It's not doom and gloom. What's going to happen the rest of the year, it's too hard to say at this point in time. But, we are seeing the signs of everyone gearing up for the spring market. It's going to be hot. So that's just what I'm seeing going on. I know this ran on kind of long, but if you made it through, congratulations. You're probably one of only like the 4 people that watch these videos. So appreciate it. Let me know what you think in the comments, or if you have a question, reach out to me directly. I always like to talk about real estate, even if it's not houses, if it's mortgage stuff, just numbers. I'm a numbers guy, so that kind of stuff interests me. Until next time, I hope you found this video informational, and we'll see you on the next one.